Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, we're now into the fifth consecutive day for the Australian dollar as it surges higher and now near enough reaches the highs around 74.60 after inking a high of 74.40. This is the last resistance I'm holding in terms of this current run, and while intact at 74.60, views a pullback, maybe to 73.80 with a base short term at 73.35. However, above 74.60 would leave me neutral in the assessment to the top side and would furthermore look back over previous times to see how the market challenged these top side areas, and will there be a further rise or can we see a rejection? The euro heads lower on Friday into Monday and now heading closer to the target of 107.50.85 after inking an intraday low of 108.21. I do anticipate from this bottom side of the range that we could see renewed demand as we saw 4 times back here in 2019-2020. The dollar index, however, which measures the greenback strength against a basket of 6 major currencies, surged to 99.20, the highest since May 2020. As the technicals on a broader base is oversold, and also in the weeklies, I feel that we could see some profit taking coming into this market very soon. What started the whole sell-off for the euro, for the rally in the US dollar, was all eyes looked to the US jobs numbers that came out on Friday. The US economy accelerated last month after the US Department of Labor said that 678,000 jobs were added in February, the largest monthly total since last July. And the unemployment rate dropped to 3.8 from 4% in January, extending the sharp decline in joblessness to its lowest level since the pandemic erupted 2.5 years ago. Let's see how the market plays into the European session and see if this level holds around 107.50.80. Another down test for dollar yen as it still maintains sideways in this 114.70 to the top side around 115.70 to 116. In light of the pattern though, we are getting a little bit heavy here. Even if we do see a break, I feel the demand may actually come back around this 114.1020 and maybe see a bounce. Or we respect the level at 70 and rebound from 114.70. Sterling plummets lower and now heads to the bottom side of the broader range, which is seen around 131.60.80. In light of the pattern, as long as we hold, and this divergence that's seen here, could see the market rebound quite sharply back towards 133.5 to about 134.30.40. However, close under 131.60 would leave me neutral. Sterling Kiwi, looking at the dailies, you can see reaches the next target downside after crushing the region of around 194, and therefore looking to see whether the base can hold now, as we are extremely oversold around 19000. If this level holds and we can get a rebound, then I'm looking back towards the top side of 194.20.50. First of all, the market gapped open this morning as the Russia-Ukraine crisis continues and hits the fresh high seen around $2,000 a ton for the gold. Looking back to these levels, we can see the market was challenging in around 2020 highs, and we saw very much a spinning top forming here. But if we look at this pattern, how the months grew to the top side in the terms of when Trump was president, and now we're getting into the safe haven demand due to the Ukraine-Russian outcome, is that the market is getting very much near to the top side of its range. There is still some divergence here, and I feel if this is a exhaustion pattern, then we could see this, or breakaway exhaustion pattern, should I say, then we could see a plummet. As we can see previously, we can easily lose $100, and therefore we've got to be very much on our guard if we are trading gold, as the ADX is overheating. At these levels, I'm neutral. I'm just waiting for a better opportunity to come into play, and that is if we do see a break of 1,700 1970, that is, and then that would give a further indication that we may have seen an exhaustion breakaway gap. Oil, well, is sitting all on its own up here at the top side as it's posting a doji, and therefore could be a sign of a reversal, and therefore see the market drop back towards 118 to around 112, and maybe even lower. But at this point in time, let's see how the market plays into this doji and whether or not it's an opportunity for the bears to come back. That wraps it for today. Thank you very much for joining me, and as always, keep an eye out for the intraday report. I hope you enjoy the rest of the day.